Hi, good afternoon. Welcome to the marketplace. Coming up, IMF projects Ghana's debt-to-GDP ratio to hit 60% by end of 2025.
From 82% in 2022, it's a public debt, we estimate or we project that it will reach 60% of GDP in 2025. So that is a fairly steep reduction in public debt.
Also coming up, government secures $360 million from World Bank to support economic stabilization. Plus, banks commence enforcement of new Forex guidelines, including 5% fee on all foreign exchange withdrawals. My name is Darryl Kwao. Thanks for being with us this afternoon. Details coming up. Thanks for staying with us, everyone. First up, Ghana's debt-to-GDP ratio is projected to reach 60% by the end of this year, according to the latest assessment by the International Monetary Fund. Speaking at a news conference in Washington, D.C., IMF Director of Communications, Julie Kozak, emphasized the need for Ghana to sustain ongoing reforms in order to achieve long-term debt sustainability.
The recent restructuring agreements have significantly improved debt service indicators for Ghana, and that has created more space for economic recovery and also investment, much needed investments in the economy. According to our latest assessment, public debt is expected to fall fairly sharply from 82% in 2022. It's a public debt, we estimate or we project that it will reach 60% of GDP in 2025. So that is a fairly steep reduction in public debt. And that marks a quite significant step toward durably restoring fiscal sustainability. Now, to make this kind of stick for the country, it does mean that Ghana will need to continue on the path of reform. And some of the reforms that are needed to really entrench debt sustainability will include boosting domestic revenue in the country, strengthening, as I mentioned earlier, public financial management to ensure that expenditures are effective and efficient, and of course, in a broader sense, maintaining overall fiscal discipline. These are all really essential to lock in the recent gains.
IMF Communications Director Julie Kozak there on Zoom with me, Associate Professor of Finance at the Andrews University in the US, Professor Williams Pepper. Good afternoon to you. The IMF projecting Ghana's debt-to-GDP ratio will fall to 60% by the end of 2025, citing the recent debt restructuring efforts. How sustainable is this trajectory, and what risks could undermine this projection?
Thank you, Darryl, and good afternoon to your viewers. Thanks for having me. This is coming as a good news. If you know our history, where we went above 100% debt to GDP, we came to 80%. I think currently we are below 50% based on Bank of Ghana's data. This projection of 60% in my view is good news. However, I see it as very fragile. We are improving all right, but we need to do more. In my perspective, the way that we have to sustain it, some of the points were mentioned in the IMF document. We must tighten our expenditure control, which is very, very important. When it comes to the expenditure control, specifically, our Financial Management Act we must follow it religiously. And thirdly, our procurement issues, that is where we normally fall short, that normally bring the spillage. The fourth point that we may have to look out for is how we align our long-term debts and their interest rates is important. The fifth point is the energy sector debt. If it's not addressed, is going to take us off the 60% target. The sixth point I want to mention, which is very critical, is our exchange rate situation. If the CD weakens, it means that the debt figure will go up. So both the monetary policy team and then the Ministry of Finance must work very hard to make sure that our CD gains this strength. Recently, we've seen it being depreciating a little bit, but they have to do whatever needs to be done to ensure that this is controlled. Because if the CD weakens, the 60% figure will go above it. So in short, fiscal discipline is very key. These are some of the factors and conditions that I think that if we are not able to watch may cause us to miss this target of 60%. Remember, IMF want us to, if you say you are a country is debt sustained, that is you are 55%. So even the projection of 60% means that we are above the set target.
Right. In the meantime, the World Bank handing us some $360 million to support our fiscal reforms and economic recovery. What difference is this going to make?
This money, $360 million US coming in, is going to give government some fiscal breather and space. It also gives some form of assurance to investors, and that's pointing to the fact that Ghana is on a path of resilience. So that is the main thing. But in reality, it's not the money that we need the money, all right, but this money will not solve our problems. We really have to focus on how do we restructure our economy, which is very key and has been on the agenda. How do we make sure we raise our own domestic revenues? We mobilize very well. How do we make sure that we bring back the energy sector debt into control? This is very key. So it's good we having this money, but if we don't focus on restructuring and then also putting in control measures in terms of financial spending, the money, I mean, probably we may not even see it used. It may not be able to be sufficient enough to help us solve our problem. But I'm hoping that the Ministry of Finance, the team there, are going to put this money into good use. In my view, though we agree this is a form of support coming in, you may have to have a target or something that we are going to use this money for specifically so that we can point to say the $360 million US that came in from the resilience support from the World Bank. This is what we have used the money for.
Well, switching topics, commercial banks, you understand, are now enforcing the 5% fee on Forex withdrawals funded by transfers and checks. How do you see this affecting the Forex market behavior and the implications it might have on liquidity and confidence in the banking sector?
Well, I see this measure as a short-term game changer. It's not for a longer term. The longer term effect is negative in my perspective, but probably because maybe the Bank of Ghana is seeing high demand for inflows, cash withdrawal at the banks. That's why they are bringing in this 5%. In fact, I'm sure they may have to go back and probably review this policy maybe after 3 months, because if it continues this way, it's going to erode the confidence in the Forex market. We may see more black market activities and cash transactions also in the black market. This will affect the entire trust and the foreign market system in Ghana. And so the other part is that probably both the central bank and the commercial banks may have to educate their customers very well. The reason why this 5% is put in place is specifically to stop or in the short term reduce the pressures on bank forex demand and then real cash withdrawal. If you look at the directive, it says if you deposit cash, you can withdraw cash. But if the money comes in by forex or into your foreign account or check, you cannot go and demand US dollar cash, which it makes sense because that is not a major currency. So anytime you have to withdraw, it will cost us. So paying 5% makes sense. But in the short term, it will solve the problem, but this is not a long-term solution to the entire forex situation we have in Ghana.
All right, thank you so much. Associate Professor of Finance at the Andrews University, Williams there. Appreciate your time. Enjoy the rest of your Friday. You're watching The Marketplace. Now, MTN Ghana has officially launched its maiden Digifest 2025, an initiative aimed at showcasing the digital innovations and commitments to driving Ghana's digital transformation agenda. There's more in the following report.
MTN Ghana has officially rolled out Digifest 2025, positioning the company at the forefront of technology and digitization in its service delivery. Speaking to the media, Chief Executive of MTN Ghana, Stephen Blewett, reaffirmed the company's commitment to advancing digitalization nationwide. He stressed that MTN will continue investing in Ghana's digital economy to promote inclusion and efficiency in everyday life.
We have given $2 million to the 1 Million Coders project, which shows our commitment that we want this to be a big part of growing the economy. And we're very, very passionate about that as well. What makes me excited is if that coding project produces more people like we see here, I'm super excited for Ghana. And I think as Ghanaians, everyone needs to say proudly Ghanaian, digitally made in this country. So that's what we're seeing here. We're very excited about it, and we'll continue to invest in growing the digital economy in Ghana.
Chief Digital Officer at MTN Ghana, Ibrahim Maisto, who also highlighted what Ghanaians should expect from this year's festival.
This is our maiden Digifest 2025. For the next few days till the end of the month, you will be experiencing more than just the technology. You will experience the future unfolding before your eyes. You will see how we are harnessing AI to reimagine customer experience and empower businesses. How we are unlocking gaming and digital creativity to connect Africa's young talents. How we are building platform that fuels entrepreneurship and opportunities. And how we are showcasing digital lifestyles that bring technology to life through music, entertainment, and culture.
With Digifest 2025, MTN Ghana is not only reinforcing its leadership in the telecommunications industry, but also positioning itself as a key partner in shaping Ghana's digital future.
You're watching The Marketplace. Ahead, we will be exploring opportunities in the orange economy. Do not go anywhere. And welcome back to the show business segment of the marketplace. President John Mahama's maiden media encounter placed the creative economy at the heart of his administration's job creation agenda. He emphasized that while traditional sectors like create a considerable number of jobs, the creative arts through culture and digital platforms create more. When we set this against Ghana's 2024 tourism report, we see just how much potential lies in linking culture, tourism, and creative industries, what has become the orange economy. I'm joined by culture journalist Kenneth Auchidako to discuss how stakeholders can unlock this potential and make Ghana a hub for the orange economy. Good afternoon. Thanks for joining us.
Thanks for having me.
How are you doing?
And welcome back to Ghana, since I'm now seeing you for the first time.
So President Mahama made a bold claim that the creative arts creates jobs 5 times faster than traditional industries. I found that to be very interesting. What does this mean in practical terms?
So essentially, between Akwaba and Laken, there is, some money to be made in between that.
In between.
And that is essentially where...
I love the way you start.
Exactly, because we have some of these conversations, but a lot of the time we forget about the monetary aspects of it. And that is why this conversation is very important, because the comparison that President Mahama made in his media encounter was very stark. The fact that he mentioned that 5 times of the job that will be created in the traditional sector can be created in the creative economy, which is very interesting, because let's just look at this comparison.
Yeah.
If you look at the fact that a film producer is about to create, a film, he employs so many people, actors, videographers, producers, set designers, amongst other things, fashion designers and all those things. Those things, create employment for different kinds of people within a very short time.
That's true.
And they are able to make, some money for themselves and their families to be able to stay afloat. Comparing that to a traditional sector like the agriculture sector, let's take, for instance, cocoa production. If it's one of the top, products in the country that is giving us so much money, the scalability is much slower compared to how fast the money that's going to be made by the other sectors, such as the film industry, which contributes to the creative economy and in turn goes ahead to contribute to the entire GDP and revenue of the country as well. So that is a very, practical example of how a traditional sector will, create, 5 times less of a job than what the creative industry is going to make.
Yeah, so how does that tie into the $3.8 billion we earned from tourism in 2024?
So if you look at last year's report, for instance, it's made, this figure that you're talking about, we know that tourism revenue in 2024 made, $3 billion, which is quite, a significant figure.
That's huge.
Some weeks ago, on Beyond the Numbers, we delved into some of these numbers and realized that it is very interesting that if you look at the Forex earners for the country last year, tourism came second, only behind gold.
That's cool.
After tourism, there was oil, and then the fourth was cocoa. So you can imagine the value that is in there that we are not tapping into, which is why it's important that we have, conversations around these things. Because, there is a lot of value. And if you look at the fact that the country is also looking forward to expanding its revenue net and also create some more development and employment, essentially, for the young people who are coming up. This is a very key area that must be looked at.
And now that we have concerns about illegal mining, we have to be looking elsewhere for money. So the president announced plans for a golden age of culture, arts, and tourism. How realistic is this ambition, given the challenges faced by the sector?
It is very important because we are in an age where it is easy to get whatever you are doing out there. We are very used to traditional ways of doing things, and technology is making that even more pronounced, being able to compete with a global audience, which means that it is essential that we look at how best we can accelerate our creative space to, meet up the demands of the global industry and also make some money and create employment as well. So if you look at the fact that the Black Star experience that the government has started, it was one of the issues that people, ahead of the president's address, people mentioned the fact that it hasn't been, there haven't been any serious commitment in the eyes of critics that, a lot of commitment has gone into that. The president has essentially made mention of the fact that in the next budget that's going to be read, there will be some allocations made to, fortify the commitment that has been made towards the Black Star experience as well. So we are looking forward to that happening as well.
Yeah. What would you say is the single most important thing that the government or the president has to do to ensure that we see these gains?
So there has to be strategic partnerships, because the solutions that have been touted from the campaign of the NDC going into their, current stance as the administrators of the country, these are issues that have to be looked at as well. So we need to create the frameworks, ensure that the strategic partnerships are met to ensure that everybody in the value chain contributes to ensuring that the country sees developments in the creative area and also contribute to the essential revenue that the country needs to develop.
That's interesting. I'm also excited that at least the president mentioned the orange economy in his encounter with the media. Usually would just sideline this aspect of the economy, but very important.
Exactly.
Thank you so much. Great to see you.
Great to see you too.
Our only culture journalist, Kenneth Ochidako. What are you doing this weekend?
We'll see. I'm looking up to you. Anything you propose, I'm down.
Well, there's the
Since you just came back from the US.
There's a Habitat Fair.
That as well.
There's a Habitat Fair happening at the Good Park near Cromwell. Maybe you want to check that out. I know you have so much money. You want to buy a house, or maybe you consider building.
That's a good place to spend the weekend.
Exactly. Good park. Plus, there's loads of entertainment, I guess. I'm sure music you can dance to. Anyway, great to see you, Ken. That's the marketplace. More news on our website, myjoyonline.com/business. My name is Darryl Powell. Thanks for watching. We'll see you next week.